Welcome back. Let's get chatting about the primary market. Seigall's IPO opens up for bidding today. Ceigall is a Ludhiana-based EPC contractor. The infra player is offering shares in the range of 380 to 401 rupees a piece. Fresh issue is closer to around 650 crores. Majority of that used to repay debt and some to buy equipment as well. The MD, Ramneek Ceigall, and Group CFO, Bhagat Singh, joining us shortly. But we have Mr. Sehgal with us. Mr. Sehgal, just a couple of questions first up. If you could tell us, as of date, what exactly is the order book that you're sitting on? What is your execution pipeline over the next 12 to 18 months? And with the money that you will use to repay debt, what remains the debt on your books?
Hi, first of all, thank you so much for having me over. And our order book value is close to 9,400 crores. And if you talk about company is present in more than 10 states. We have a lot of verticals. If you talk about Ceigall, what Ceigall does everything what comes on the road. So starting from highway, expressways, elevated roads, then railway overbridges, railway lines, runway, metros. Above all, we do tunneling business also. So talking about the proceeds, 684 crores will be utilized to reduce the debt. About 99 crores would be used for machinery, and rest is general purpose.
Mr. Sehgal, since you mentioned the proceeds of the issue, let's go there first. After you pay off these borrowings, how much debt will still remain on the books? What is your current debt equity ratio, and where do you target it to be, and where do you want to bring it down to?
So, the debt would be negligible. At the company level, it's around 600, and 414 crores will be reduced. So, it will be negligible. And other is a non-fund base, which we require it for all our bank guarantees, which we have to give it for performance bank guarantees or surety bonds at the time of the bidding.
Right. Your order book, you said, was close to 9,400 crores. If I look at the way your revenue has been, it's increased from closer to 900 crores in March 2021 to close to 3,000 crores now. What is your execution pipeline now? This 9,000 crores, over how many years does this get executed?
So the timeline for the execution of these order book is close to 2.5 to 3 years. So little background I'll give you. So last year we have done about 33% ROE and about 50% CAGR. And as a company, a 60% order book value is from structure work. So we have just completed more than 95% Delhi Saharanpur, which comprise of 11.24 kilometer of the elevated structure. It is one of the longest 6-lane elevated structure. Companies engaged in executing one of the longest 4-lane elevated, which is in Bihar, which is about 19 kilometers. The project is worth 1969 crores. And the project which we have already completed more than 95% is 1,500 crores. We are doing a bridge over a Kosi bridge, which is close to 781 crores, which is funded by ADB. And we're doing 2 metros, which is Kanpur and Agra, close to 815 crores. And we have quoted for one of the longest metro of the country, which is in Agra again for 5028 crores. And the competitors in that bid is L&T, Afcons, NCC. So you can understand we are not in any rat race. We don't want to do what a typical road contractor does. So we are going in a specialized league, specialized structure business, where we want to do specialized structures, longest elevated metros, freight corridors, railway lines, tunneling, or any specialized job available in the country. Thank you. And I will add one more thing. Last year turnover, our single tender eligibility has gone to 57 crores and EPC and NHI, and HAM projects is about 5,500 crores.
Coming to that, we need some more granular details. Shareholders want to understand, your future shareholders want to understand the model and the strategy. Now, your order book currently is 9,500 crores. Just small answer so we can get in more questions. You mentioned a couple of the recent bids as well, because I believe after elections, now the activity is starting to pick up again on the bidding side. What is your L1 book currently? How many orders are you L1 in?
9,000, So 9,400 crore is the present order book value available with the company. Our 80% of the order book value is from NHI. Rest is divided with the metro, Bihar State and Road Bridges Development, which is under ADB. And we are doing one runway also. So we have quoted for another 16,000 crore project, which is throughout the country. which has this metro project also. And
So
as you said, elections have just got over and bidding fees have been started. So we have availability of about 800 crores as spare BG and bid security, so we can bid up to about $10 billion.
Okay, so let me bring in Mr. Bhagat Singh as well. Mr. Singh, same question to you. We're looking for two numbers. I believe 9,500 crores is the contracts you've already won. That's in the bag already. What is the total value of orders which are in the pipeline where you might be L1? That's the number we're looking for.
So you know what? Answer this story. So it's very difficult to predict anything. We quote as per our EBITDA levels, the two-digit EBITDA levels. So, I mean, we can bid more. For us, we can bid in more verticals, we can bid in more states.
Right,
but
we get that point.
Our EBITDA level, that's more important. And order book
we take that point. We take that point completely. We take that point. Your business has grown. You can bid higher. You have orders worth 9,500 crore in the bag already. You want to bid for specialized projects, move away from the road projects, etc., regulation projects. Here's a question from future equity shareholders of the company. Over the last few years, your revenues have grown, your margins have improved as well, but all of that has not translated into cash. I'm looking at your cash from operating activity. March 2021, you had CFO of 103 crores. In March 2022, it was a negative 135 crores. March 2023 was a negative 73 crores. In March 2024, it was a negative 211 crores. So all your orders, all your revenues, all your EBITDA margin, unfortunately not reflecting in the cash flow from operations. What is the plan for that?
Great. Bhagat will answer this question. Since he's the CFO.
Good morning, everyone. Thanks for arranging this interview. So, before I reply to your query, what is important is we need to understand the business model of the company. The first business model is EPC, wherein whatever we bill to the authority, that is NHAI, we get the collection on a monthly basis. So there is no receivable in the books. But as far as the cash flow from operations is concerned, which you are discussing, so these cash flow from operations are negative on the console level. So console level means it includes the cash flow from the parent company as well as the cash flow from the SPV company. The SPV means HAM project. In the HAM project, whenever we execute a project, 40% of the amount is received during the execution period and remaining 60% of the amount is received over a period of 15 years in the form of annuity. So slowly and slowly when we progress, when we execute the HAM project, the receivable in the HAM project increases, and when you calculate the cash flow from operation of the SPV, it turns out to be negative. That negative is in the form of accounting treatment. It doesn't mean that the cash flow of the company is negative. I elaborate it further. Standalone cash flow from operation of the Ceigall India Limited, they are positive from the last few years, post working capital changes. The HAM project which we are executing, on account of the model of the project, if we execute a 1,000 crore of a project, we are going to receive the 40% of the amount of the work done during the 2 years. Remaining, the authority pay us in the form of annuity in the next 15 years along with the prescribed rate of interest. So slowly and slowly, as and when the work completed, the HAM receivable increases and ultimately the cash flow from operations also turns out to be negative. But this is just an accounting treatment. It doesn't mean that the executed work cash flow is negative. The work executed cash flows are positive. And just to give you a further strength line, apart from the cash flow from operations which are positive in Ceigall from the last few years, the Ceigall cash flow got a further support from the SPV because the HAM project which we have already executed and completed, we are getting an annualized annuity of 80 crores for the first HAM projects, and in future, as and when the HAM projects will be completed, it will further strengthen the cash flow of the entire group in the form of annuities. Thank you.
Which is Mr. Singh, which is exactly what I was coming to, because over the years we've seen that most infrastructure players, they are preferring to go via the HAM route because you have that 40% inflow coming in straight up front, right? Now your mix between EPC and HAM from what we see right now is still more skewed towards EPC. 61% of your book is EPC, it's lesser HAM. So just tell us, I mean, in the future, are you planning to bid for more HAM projects? And if yes, how does this mix change? And more importantly, we are bothered with margins. Now, at the EBITDA margin level, your margin profile has improved to about 17%. What is the run rate that you're targeting, sustainable run rate, say over the next 1 to 2 years?
Two things I would like to elaborate. Number one is, for us, what is important is we are not into any order race. We bid for a contract on the basis of the targeted EBITDA margins, which is prescribed by the management, both for EPC, which is a double digit, and also for the HAM project. So our motto is, whenever we bid for a project, this prescribed targeted EBITDA margin has to be taken into consideration while bidding. This is the first part. Number two, ma'am, we are more keen to work on pan-India basis wherever the profitable contracts are available for execution. Since the Ceigall pre-bidding qualification is 5,700 crores for the EPC and 5,500 crores for a HAM project, which is one of the most highest bidding qualifications. We believe that the competition would be quite less and Ceigall will not face any issues while tendering. Further, number 2 point, ma'am, as you asked me, what will be the trend of the future margin? So since my company is into IPO, we can't talk about the future profitability, but yes, we believe that the company, since we are following a uniform philosophy since inception, so we believe that the work executed in future we may be able to turn out the profitability which we have already achieved in the past.
Wonderful. Mr. Sehgal, Mr. Singh, thank you so much for joining in, explaining your business to us, talking about what your plans are going forward as well. But, we wish you good luck. Once you list, we'll invite both of you all to join in, and that time we'll press you for a lot more numbers around, your earnings, etc. as well. Wish you good luck. With that, we take a short break, and as we do that, we're thrilled to announce that the College Connect program under our ongoing season of HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective, recognizing college students as the leaders, opinion makers and change makers of tomorrow. This unique initiative encourages the youth to foster inclusive and diverse workplaces, drive gender parity and tackle societal and business challenges as well when they join the workforce. We're catching them young in the colleges itself. We're kicking this off with IIT Delhi on August 3rd from 3 p.m. onwards with some of the biggest leaders and voices joining us. Stay tuned.